Welcome back to Investing Talk podcast. Today, we're zeroing in on an important event for many investors, upcoming earnings reports. And specifically, we're going to unpack the highly anticipated Q2 2025 outlook for Borr drilling. Our mission here is really to arm you with the crucial details, the history, the market insights around Borr drilling's report. So together, we can figure out exactly what to watch for. And hey, before we get started, if you find this kind of analysis valuable, please do hit that subscribe button, like this discussion, and maybe leave us a comment. Your support, it helps us immensely. Plus, if there's a specific company you want us to look into for a future show, just let us know below. And if you're feeling extra generous, maybe consider buying us a coffee. The link's always there. Okay, let's get straight to it then. Borr drilling's Q2 report. When should folks be marking their calendars?
Right, the timing, always important. Borr Drilling is set to release its Q2 2025 result after the NYSE market close on Wednesday, August 13th, 2025.
Okay, after the close on Wednesday.
Exactly. And then the follow-up, the conference call and webcast, that's scheduled for Thursday morning, August 14th at 9:00 a.m. Eastern Time.
Got it. So a busy end to that week for anyone tracking them. Now, what about expectations? What are the analysts predicting for this quarter?
Well, the consensus estimates are pretty clear. For Q2, revenue is projected at about $265.81 million. And earnings per share, or EPS, the expectation is 0.11 cents.
11 cents a share.
Correct. And it's worth noting there wasn't any specific Wister number cited in the info we looked at. So we're really just going off that formal consensus.
Interesting. And did the company itself, did management give any specific forward guidance for Q2? Any hints from them?
Actually, no. Based on the available results, it seems management didn't provide new explicit guidance for Q2. And looking back at Q1, they reported that negative 7 cents EPS, which missed estimates.
Right, the miss.
Yeah, and even then, no formal forward outlook was given in that announcement either. So they seem to play it a bit cautious with projections, keep their cards close to their chest, maybe.
That Q1 miss you mentioned, that brings us nicely to historical performance. How has Borr drilling typically fared in past earnings reports, especially considering that recent miss?
It's a really important question. So Q1 2025, we know EPS was negative 0.07 cents, missing the street. While we don't have the exact beat-miss numbers for all the quarters prior right here, the recent trend does include that Q1 miss. So it hasn't been a perfect streak against expectations lately.
And here's where it gets, well, really interesting for me. How did the market react to that Q1 miss? Because usually a miss means the stock goes down, right?
Usually, yes. But this is fascinating. Despite missing on EPS, the stock actually rose significantly. It was up 12.8% after that Q1 report.
Wow, up almost 13% after a miss.
Exactly. We don't have the details for the other 3 quarters price moves, but that Q1 reaction, it really stands out.
So what does that tell us? The market just ignored the miss or looked at something else?
I think it strongly suggests the market is looking past current profitability, especially in a cyclical sector like offshore drilling that's recovering. Investors were likely focused on forward-looking things, maybe stronger contract potential, rising day rates, future utilization, anticipating that recovery gaining steam.
Okay. So the future outlook trumped the past results. Makes sense in that context.
Precisely. It's like the market was saying, okay, Q1 wasn't great on the bottom line, but we see better times ahead, and we're buying into that story.
So if the market's focused beyond just revenue and EPS, what other key metric trends should we be watching closely? What tells the real story?
Well, revenue growth itself has been a key point for them, which you'd expect. But what's also really compelling is the jump in institutional ownership.
You mentioned that earlier. How high is it now?
It's now at 83.12% of shares outstanding. That's a huge portion held by professional institutional investors.
83%. That's a massive vote of confidence from the big players, isn't it?
It certainly signals strong conviction. It's like they've collectively decided this is a place to be in the offshore space.
But you also mentioned some gaps in the data.
Right. The available info doesn't give us specifics on historical margins, rig utilization rates, or day rate trends. Those are critical operational metrics, especially day rates, what they charge per day for the rigs. We don't have that historical context from these sources.
Okay, good to know what we don't know as well. Let's shift gears a bit. What about recent catalysts or broader market context? Any specific news driving the buzz around Borr drilling lately?
Well, during the quarter, they held a special general meeting back in August 2025. That points to ongoing corporate activity, maybe strategy discussions happening.
Okay.
And of course, the stock price itself has been surging, attracting attention alongside that high institutional interest we talked about. So it's definitely been on people's radar.
And the wider sector, offshore drilling in general. Is the tide rising for everyone, or are there specific headwinds?
Generally, the sentiment for offshore drilling seems positive right now. You can see that reflected in Borr Drilling's own stock, up, 8.33% in the days just leading into these earnings?
So momentum is building.
Yeah. The broader tailwinds are things like higher oil prices, increasing demand for offshore rigs, the energy landscape is shifting, and importantly, our sources didn't mention any major supply chain issues or macro headwinds hitting them specifically. Seems like relatively clear sailing for the sector at the moment.
Given that positive backdrop, have we seen analysts making moves? Any notable upgrades, downgrades, price target changes recently?
Nothing major cited directly in the information we reviewed, no big headlines on analyst rating changes. But again, that surging institutional ownership and the stock's momentum, that kind of suggests a quiet underlying optimism among the professionals. Even if it's not showing up in flashy upgrades just yet, it's more like a building consensus.
All right, let's turn to the technical picture then. How's the stock chart looking right before this report? And does the options market give us any clues about expected volatility?
The pre-earnings price action is definitely strong. Like you said, the stock's up roughly 8% to 13% just in the week leading up to the report.
Following that weirdly positive reaction last quarter, too.
Exactly. It builds on that positive reaction and the general bullish sentiment in the sector. So there's definitely momentum hitting into the print.
With that run-up, are there any key price levels, support, resistance that investors should keep an eye on?
The sources don't give specific dollar levels for support. But, with the strong buying and the recent surge, you'd probably look for near-term support around recent breakout points or maybe prior highs.
Makes sense. Natural areas where buyers stepped in before.
Right. And for resistance. Probably the next psychological round number, maybe $8, $9, whatever's next, or potentially recent 52-week highs if it pushes further. But again, no precise level specified here. It's more about watching the flow.
Okay. And the options market, what kind of move is it implying? Are traders betting on a big swing?
The specific implied move wasn't provided in our data. However, given how the stock reacted last quarter, that big 13% jump, it's highly likely that options traders are pricing in a significant move this time too. Probably a moderate to high double-digit percentage move is implied. They're expecting fireworks, one way or the other.
So not expecting a quiet report then. Keeps everyone on their toes.
Definitely. Volatility seems baked in.
Okay, so let's put it all together. Looking ahead, what are the potential scenarios post-earnings? What does a bullish outcome really look like for Borr Drilling?
Well, the ideal bullish case is what we call a beat and raise. That means they beat the consensus estimates, the $1.11 EPS, and the $265.81 million revenue.
Beat those numbers.
And they raise their forward guidance. That could be driven by things like higher rig utilization than expected, better day rates coming through, or maybe a significant boost in their contract backlog.
And positive guidance is key there.
Absolutely. Positive forward guidance on utilization, margins, maybe announcing big new contract wins. That combination, especially with the current sentiment, could send the stock significantly higher. It's about exceeding expectations and painting an even brighter picture for the future.
That's the dream scenario. But you mentioned this is a capital-intensive, complex business. What's the biggest hurdle Borr faces in delivering that kind of beat and raise? What could go wrong?
That's a great question, because expectations are high. The biggest hurdle is often just operational execution. Things can go wrong with rigs, projects can face delays. So a bearish scenario isn't just missing on revenue or EPS.
Right.
It could also be signs of margin pressure. Maybe costs are rising faster than expected, or like you said, project delays, or even just a softening in their guidance. Maybe they signal lower future utilization or unexpected cost overruns.
And given the recent run-up.
Exactly. With expectations this high, any of those disappointments could trigger a pretty sharp sell-off. The market might react quite negatively if the results just meet or slightly miss those elevated hopes. It's that classic sell the news risk.
So beyond just the headline revenue and EPS, which can be a bit backward-looking sometimes, what's the single most important metric you will be watching? The one that really tells us about that future potential everyone seems focused on?
For me, and I think for most long-term investors here, besides the headline numbers, It's got to be that forward fleet utilization guidance and the contracted day rates,
Utilization and day rates, why those specifically?
because those are the leading indicators for sustained growth in this industry. High utilization means their rigs are busy, and strong day rates mean they're commanding good prices for that work. They give you a much clearer view of future earnings power than just looking at the last quarter's results. It's about the health of the forward order book. So overall, if I had to put a finger on it, our leaning heading into these earnings is, let's say, cautiously bullish. Maybe a 7 out of 10 on the confidence scale.
Okay, a 7 out of 10. Why the caution?
Well, the pre-earnings action is strong. Stocks up 8–13%. Institutional ownership is super high. Sector sentiment is positive. Those are all good signs. But those high expectations do increase the risk. If they only meet consensus, will that be enough? There's a real chance of a short-term sell the news reaction. To get higher than a 7, we'd need to see more than just a beat. We'd need really strong signals about future contracts and day rates confirming the bullish story.
Makes sense. So for listeners thinking about a strategy around this report, what are some approaches for different risk levels, keeping that 7-10 and the high expectations in mind?
Okay, so for more risk-tolerant investors, holding common shares through earnings is one way to capture potential upside if it's a strong beat. Or maybe deploying something like a call spread that limits your risk while still giving you upside potential.
Capturing upside, but with defined risk.
Exactly. Now, for more risk-averse investors, hedging might be an option if you expect big volatility but aren't sure which way it'll go. Maybe a straddle or a strangle, though those can be expensive. Or, honestly, given the run-up and the sell the news risk if they only meet expectations, simply avoiding holding through the report might be the most prudent path. Sometimes sitting it out is the best strategy.
Good range of options there, depending on your comfort level. Well, that was a really thorough breakdown of Borr Drilling's upcoming Q2 earnings. We've hit the expectations, the history, the market vibe, potential scenarios, quite a lot to digest. Now, here's something for you, our listener, to think about. That really unique Q1 reaction, the stock jumping almost 13% despite an EPS miss. What does that tell you about how the market values different things in a hot sector like offshore drilling right now? Is it all about the future, not the past?
Thank you so much for tuning in to Investing Talk Podcast. We really hope this discussion helps you navigate Borr Drilling's report and the earnings season ahead. And please don't forget to subscribe, like this show, and leave us a comment with your thoughts. Or, hey, let us know if there's another company you'd like us to analyze. Until next time, happy investing.